decided unanimously by a vote of all members present to retain monetary policy rate MPR at 14%.
Governor, Central Bank of Nigeria, Godwin Emefiole, announcing the decision of the Monetary Policy Committee on Wednesday. The outcome was expected but not preferred by most players in the economy. The bank has maintained the same policy since June 2016, and it has been credited for the consistent fall in inflation and marginal economic growth, from repeated negative growth to 0.8%, and now it's projected to grow by 2.2% this year. The tough monetary stance also meant Nigeria became a favorite destination for foreign portfolio investors, but there's another side to the coin. The high benchmark lending rate is being faulted for taking credit out of reach of local industries and businesses.
Because 47 million businesses that are MSMEs are concerned that they are not getting, that is a very high cost of fund. They're very, very concerned. And that is the market. So you need to have interest rates lowered for the market to lend and borrow for that activity, rather than depend entirely on intervention funds from central bank. Because what the central bank does is to bring intervention funds to reduce the pain, but it goes to very few people.
For now, the committee is asking the federal government to cut back on domestic borrowing and free credit for local businesses and industries. There's a possibility the committee may lower lending rate if inflation continues to fall. The central bank had indicated rates could be dropped by July. But Nigeria will be headed into elections early next year, and huge sums of cash is expected to be spent. The fear is that could cut short the benefits of lower interest rates set by July.
I had thought that by now, if the committee were to reduce it slightly to 13%, we know that as the election now comes, they would have to move it up because there is the fear of money supply that can affect inflation. So then I can understand that. But if they keep caution, and then when the real money comes in for the election, they're going to have to start shooting up. And it's not the best that we can do for an economy that's recovered. Our growth is only 0.8%. We projected 3.5% in this year. And then you need the investment to come in to create that output and create the jobs to meet the target.
The next Monetary Policy Committee meeting is expected to hold at the end of May. But even then, the committee is expected to walk a tightrope. Yes, inflation is coming down, but at a much lower rate. Currently, it stands at 14.3% after falling 13 times. The central bank's target is to lower key lending rates when inflation is at a single digit, 6% precisely, and that's very unlikely to achieve going by the current rate of 4%. Kelechi, Emekalam, CGTN, Abuja, Nigeria.